On-balance volume is a simple indicator that uses volume and price to measure buying pressure and selling pressure. Buying pressure is evident when positive volume exceeds negative volume and the OBV line rises, and selling pressure is present when negative volume exceeds positive volume and the OBV line falls. So let's go ahead and load up the OBV. Down here at the bottom under indicators, you will scroll down to the O's. There is on balance volume. Since it's tied to price and volume, there are no parameters. Go ahead and click Update. Now, this indicator was developed by Joe Granville and introduced in his 1963 book, Granville's New Key to Stock Market Profits. It was one of the first indicators to measure positive and negative volume flow. So let's take a look at what this means. Basically, you're looking at the volume bars, okay? When you see a lot of green volume, which means the price closed higher than the previous day, the OBV line will go up. When there's lots of big spikes of red volume, which means the price closed below the previous day, the OBV line will fall. Okay. Chartists can use OBV to confirm the underlying trend or to look for divergences that may foreshadow a price change. So this is a good indicator for predicting what a stock might do next. That's why I find this one very useful. Okay. Now, take for example, there are 5 red volume days here. OBV goes down. Then there's a big green volume spike. OBV goes up. Another big green volume spike, and it goes up to new highs. As it breaks out to new highs, it goes up again. And then wham, there's the big red profit-taking volume, and it falls hard. Okay, in this area, I see more green volume than red, so the price is slightly trending up. Then you get a big red day at a bottom here. Okay, so OBV falls. And then all you see is nothing but green. OBV rises. Okay, then you get a big red volume spike and it falls hard. Okay, so, you know, right in this area, 5 or 6 days of a big sell-off and nothing but red volume, OBV falls like a rock. Okay, so it's tied to the price, the closing price, over the preceding day, and that turns these volume bars either black, which is a green day, or red, which is a down day. Now, this is exactly what the OBV is supposed to do when it confirms a trend or when the stock has no bullish or bearish divergences. Okay, first of all, there was a lot of resistance in the OBV right here. Okay, and it finally broke out above resistance on this day here. Here's the resistance on the stock price, and on that same day, really good volume, green volume, and it breaks out to new highs. Okay, so the stock goes up, up, up. The trend line is up. Okay, right here it broke below it. So if you go down here, this is the day it broke below this level of support. Okay, and the stock fell hard. Okay, then the trend is down. When the stock breaks above the lowering trend line, that becomes bullish, and at the exact same time, on huge volume, OBV breaks above its similar looking downtrend line. Let's take a look at a bullish divergence between the stock price and the OBV. Starbucks was range bound for about 2.5 months between roughly 1250 and 1550. It was stuck in this range up and down. Okay. Now, when you draw a line through the lows of Starbucks right here, it is a descending line. But when you look at the bottoms of the OBV, it was rising. On this day right here, it broke up above its latest level of resistance right here. Okay, when you go up, that was right here, and that was well before the stock broke above its last level of resistance. So this showed you that the stock, according to volume and price, there were more green, bigger green. You know, if you just scan this, it looks like the green days were bigger in this period. Okay, so this foreshadowed a possible rise in the stock price. And then, as always, when a stock breaks above resistance, you want to see big volume, and it was just huge that day. Okay, and OBV skyrocketed to new highs, just like the stock price did. Okay, so that is a bullish divergence that may predict that a stock will move up next. Here's another example of a bullish divergence. Texas Instruments was also range bound for about 5 months in this area right here, between about $13 and $17. It was up and down. The lows and the highs were in this range. So it really wasn't going anywhere. But if you look at OBV, okay, when you draw a trend line through the lows, okay, they're flat. But OBV was rising, okay? Now, when you look at the last level of resistances, it needs to beat. Let's look at this one first. You go straight down, and this was the high this day right here, okay? And then if you go up to this area of resistance and scroll down, it was much higher. This is much higher than this one. Okay, so this is kind of predicting that the stock will break out, because when you scan this area, there is a lot more big green candles than smaller red ones. Okay, that's what OBV is all about. It's looking at the green and red candle days and who's winning. Is it the bulls or the bears? Obviously, you know, in this case, the bulls won. Now, the day of the breakout, OBV did reach new highs right here. Okay, as the stock broke out to new highs. But basically, when you see a stock with resistance right at 17 4 times, or just under 17 4 times, and the OBV is rising, you can expect that the stock will move up next. Now let's take a look at a bearish divergence. Medtronic, during this period of time, was in an uptrend. Okay, the lows on the stock price trend line were rising, but the trend line on OBV was falling. That signals a potential sign of weakness. Okay, and right here there was a number of areas of support. Once there, 2, 3, about 4 times. It broke below support right here. Okay, and that was well before. The stock actually had another week or two of almost higher highs. This was the highest high right here. Okay, but it did predict, and then again, when it really broke support right there, that's when the stock fell hard. Okay, so price up, OBV trend line down, expect weakness in the stock going forward. Here is one more example of a bearish divergence. Valero Energy was setting higher highs through this time period right here. But look at the trend line at the highs of OBV. They were going lower. Okay, there was a lot of support, 1, 2, 3, 4 times in this area on OBV, and the day it broke below it, the stock was down big. Okay, so it was predicting lower highs. Okay, and that's what we started to get, is lower highs. Okay, when you draw a line through the highs here, it now starts to match the trend. OBV is not a standalone indicator. As with many indicators, it's important to use it in conjunction with other aspects of technical analysis. It can be combined with basic chart pattern analysis or to confirm signals that come from momentum oscillators.